Hi everyone, I'm Stephanie Thomas.
And I'm Mary Thomas
of Thomas and Thomas PC, also known as
the Sales Tax Sisters.
And today we are talking about audits again. And the topic is estimates.
The dog ate my homework.
We've all heard that.
Yeah. Basically what happens is there are some taxpayers who, and we talked about this a little bit before, when they upgrade accounting systems, when there's a natural disaster, a hurricane came, the tornado came and tore the building up and all the records are gone. There was a fire, the water pipe burst. One of our favorite clients thought that because there were disasters that happened with their company, and they were on record, they were natural disasters, hurricanes, that for a small period of time, they didn't have to come up with records. That's not true.
No.
You are responsible as the taxpayer for having all the records required for the auditor to perform the audit. If you don't have those records, they are perfectly within their rights to estimate. I don't like estimates. I don't like estimates because, in my opinion, they tend to be high. What's happening with most companies is over year after year, your sales increase. Your level of activity increases. So if someone is going in and they're doing an estimate for 4 years ago based on what you're doing today, that's not great for you. If you've been growing over that period of time. Plus, I find that a lot of times people are doing the right thing. You understand your taxability. If you don't, it may be a small error here and there. If you can prove that, that's better than having somebody go in and do an estimate because they cannot substantiate what you did.
Exactly. And some people think if they may have the records, but they think if I don't provide it, then, the audit will be stopped or I don't have to worry. That never works.
No, those auditors have a job. The taxing authorities have a job. If you get the letter saying that you're being audited for compliance, guess what? You're going to be audited for compliance. And the worst situations I've ever seen of people coming and asking for help is people who have ignored the audit. I mean, completely ignored the audit. And they're at the point where the auditor made an estimate because they didn't cooperate.
They didn't provide the records.
It's a really high number, and all the deadlines have expired. So there's no appeals process. The bill's final because you didn't participate. And at the point that this person is now wanting to participate, all the avenues have been closed. And you don't look like a good actor because this auditor's been trying to get in touch with you. They've been trying to get you to participate and you didn't. At that point, can you imagine calling a taxing authority and saying, look, this person really doesn't know this tax and we're really ready to participate in the audit process. They're on the phone with you and they're like, that would have been nice 2 years ago.
Yeah, that time is over.
Yeah. It's like you need to come up with the way to pay this.
So the big takeaway I think here is try to avoid estimates if you can. And one way to do that is to keep your records.
And to participate in your audit.
Yeah, participate in the process.
Designate the contact person, whether it's internal or external. Again, a topic of another video. And participate fully in the audit. If you're the owner of the company or the money's going to be coming out of your pocket, you need to make sure that contact is not only working with the state, but that they're working with you. So there are no surprises. You don't want an estimate. An estimate is just an indication that something went wrong. Something in the process went very wrong. With the way things are right now in terms of scanning things and putting them in the cloud, it makes it really problematic to say, I don't have any records.
Yeah.
So, and I think personally that would make it so that people have less patience with you saying that I don't have any records. If you're a small mom and pop, I tell people all the time, the auditor will understand. They will give you more time. They're human beings. I haven't met one that was just nasty to be nasty. They have a job to do. And if you don't provide the records, They're supposed to estimate. I mean, what are they going to do? Not do their job?
Yeah, that's not gonna work.
Yeah, it
at
doesn't
all.
work. So, big takeaway. Take care of your records. Make sure that you have them. If you have someone who likes to clean and be neat, don't let her loose in your storeroom. I've seen that too, where people will say, well, you know, a shredding company came by 3 years ago because somebody couldn't stand having all these records everywhere. Well, the audit period is 4 years.
In
And you mean
Texas.
in Texas. And audit periods range in the United States usually 3 to 4 years if there's no finding of fraud anywhere.
Mhm.
So, you know, you got to have the records for a complete audit period.
Yeah.
So, and when we say 3 to 4 years, for some, based on your filing frequency, you might want to keep your stuff for 5. You want to keep your stuff for 5 years if you're an annual filer. So with that, we're going to sign out. I think you all have the point. You don't want estimate. To avoid it, make sure you've got your records or that you can get them, and participate fully in your audit. Delegate it to a contact who's going to stay on it in terms of talking to the auditor and communicating with you. So there are no surprises. And always stay on it because things happen. People get sick, people move, people pass, and the wheels keep turning. So it's your business. You're ultimately responsible for it. Act like it.
Yeah.
So with that, if you like the video, please thumb it up. Consider subscribing and hitting the bell. If there's anything that kind of tickles your fancy and you want to talk about, let us know in the comments. And we want to thank you for looking at the video. Yeah. So with that, we're going to head on to another topic in our audit series. Now take care. Bye.